But the thing about being able to forecast the future is that you can work backwards and you can define what you need to do today. Maybe it's soft and fuzzy, but you can take action towards getting closer to that point in the future. And that's what I love the most about what I do is I'm I don't try to control the outcome or the future, but I can use a set of assumptions and I can help people solve for what steps they need to take to get closer to that milestone.
Well, Lauren, I'm so excited to have you join me for this episode of Coffee with Closers.
Thank you. Thanks for bringing me on.
Most certainly, every entrepreneur has some interesting story of how they overcame obstacles to become an entrepreneur. So I'm kind of curious to learn a little bit about your journey. I know you've had a very successful career and travel around the world, and now you're in California, started this new practice, and on your own, trying to build this new practice. So can you share with our audience a little bit about your journey and how you got to where you are?
Yeah, definitely. So my journey started 20 years ago. So I entered into the wealth management industry back in 2006 as the Fed was aggressively raising rates. I think they were on their 17 rate hike to get ahead of inflation. And little did I know that 2 years later, the financial world would practically fall apart. But I began my career at Wachovia Securities as a client service associate. So I was basically supporting a financial advisor. I was 22 years old. I was pretty fresh. I was going through college simultaneously. And when I got my Series 7 license, which is like the license to sell stocks, bonds, mutual funds, whenever you work in the brokerage world, I kind of grasped on and I was like, this is what I want for my life, and built a path ahead to achieve that goal. And so I found myself in a position where my ex-husband went out to Afghanistan for a year. As a result of that, we got choice of orders and decided to go to Hawaii. 2008, 2009 happened. I ended up pregnant with my daughter, Stella Rose, right around that same time period. And I was able to, like you, become a stay-at-home full-time worker at the same time. So I went to school full-time. I finished up my degree in finance from Hawaii Pacific University. And then I went on to start my master's in financial planning. I mean, I finished my degree in December and I was in my MBA program in January of the next year.
Yeah. And then, yeah, go ahead.
I was just going to say, after that, I came out to California, hopping a flight from the Air Force Base in Hawaii to Travis, and decided that I really wanted to be here. I found a job here and took it. And I was there for maybe another year before I became a full-on financial advisor myself. So I think it was like an 8-year journey from start to the point where I had the education and skill set to actually become a financial advisor.
Yeah. And then now you started your own practice. So you work for a large organization. What was the inspiration behind, okay, it's time for me to kind of go on my own and do this?
Well, I think I've lived my life in these decades, right? So my first 10 years, I basically started my career in wealth management. My second 10 years, I built a practice from 0 to 330 million. I had more clients than I could handle on my own. And my value system just started changing. I couldn't put my finger on it if you asked where the misalignment started occurring. I know where it ended for sure, but I think it was, private equity entered our space back in 2018. I'd say that they started really putting gasoline on the fire of the wealth management space. And as companies turn over, there's more just metrics on top of metrics in the financial engineering of the larger companies as they come to fruition. And I think it becomes a little bit harder to navigate that space as a employee or as an advisor. And there was a part of me that felt like being at capacity at 41 years old was not a good space for me. Like, I am a builder and I love being part of bringing successful ventures to fruition, right? I like helping clients plan for early retirement because we literally get to build a plan and fund it in a duration of time that sometimes, 5 years, 8 years, 10 years. And then we bring them to that point where they're finishing up the marathon together. We get to go through that whole journey. And so I felt like in this particular space, I was able to build out my last career in less than 10 years. And I needed to transition back to a space where I could put my energy into building again. And now we're kind of
Mhm.
thinking about like this 21st century. What does this new financial model look like as the baby boomers transition wealth to Gen X or the millennials or even down to, Gen Z eventually? There's a lot that has to change in the way that we've been doing business for decades
Mhm.
as the needs evolve and as the modalities of communication evolve. How are we going to keep up with this? And so for me, I really started putting on this cap of like, this isn't what we're doing right now is not going to work for this next generation. I am part of this next generation. And I feel like I need to lead a portion of that.
Yeah. So I think there's some good value that you brought up in terms of what you saw working for a big man and then getting, venture capital money coming into fire the growth. And then the value system change you saw misalignment in what you believe is the way to serve the customer and what the priority should be versus what the organization as a whole might be thinking, which led you to kind of go on your own, start a practice. And I was reading through your Prosper Plans website, how you have some priorities in terms of the value system that you're using to serve customers, empathy and integrity and all of those things that you've kind of alluded to there. And how has that transition been for you, going from a big, working at a big organization, now starting as a small practice, trying to build from ground up, right? You said well over $300 million in asset under management that you built up, and now you're starting from scratch.
Yeah. So the transition, I guess that's multifaceted, right?
Mm-hmm.
I did a lot of financial planning to get myself to that financial freedom area where there's not a lot of pressure to bring in as high of income as I was before. My goal when I was doing my financial planning was to build a life of freedom where I can live with passion and purpose as opposed to a paycheck.
Mm-hmm.
And so I did the same thing that I do when people are looking at fire. Like if a client comes to me 40 years old, they say, "Hey, 53 years old, I want out." I'm going to build a plan and help them fund the accounts that give them the most freedom in terms of getting them away from premature penalties.
Mm-hmm.
And then we can also build around Affordable Care Act healthcare coverage so that if we keep their income artificially low enough using, a trust account or individual or a joint account and um, the Roth, then we can kind of prolong the duration that they can receive income while not interfering with their ability to get this affordable coverage. So there's a lot of things that I did on the financial planning side. On the back end of building the business, I think it was a lot of kind of envisioning what you want that to look like and finding the right partners to support you, right?
Mm-hmm.
And so in that sense, it's reviewing the larger firms that you're attached to, interviewing, finding partners that align with your value system. So for me, I already put a lot of pressure on myself. Like that's something I'm really good at. I'm type A. I've always been very motivated. I went to school full time and worked full time most of my early career while I was building. And I still have that energy, or I guess that energy's found me again. For a while, it was at capacity. It was overwhelmed. I was just tired all the time. But I re-engaged that energy that's kind of always pushed me forward. And I was able to start thinking of what I want this new practice to look like and who I want to serve and how I want to go about doing this. And for me, it's really about building a team that I can count on to be there. The turnover in the larger companies has grown over the last 4 years. I mean, we've all seen it as we went through COVID, and we've all seen coworkers come and go. And for my clients, I really want them to know the team that they're working with because I want them to feel comfortable going to Shannon or to Chris if they need something in my absence. And so I started thinking about, what do I want this to look like? I want it to be a smaller practice. I want 100 to 150 clients. I don't need 350 households and almost 600 clients to have a successful business. You really only need less than 200 people that believe in what you do and trust you, that you care about and take care of, right? So
Mm-hmm.
for me, it's not about building an enterprise. It's about building relationships where I can take care of these people. Right now, I have a number of widows, who are losing their executive functioning. They're aging out. They're in senior care facilities. They can't drive to see me. I have to go visit them, and they need more help with, less about investment management, but more about, did the bills get paid this month?
Mm-hmm.
Is the rent set up for the senior care facility? Do you have your power of attorney and estate plan in place? Do I have that in my records? Am I interfacing with the people who are going to take care of you when you get to the point where there's zero executive capacity? And I needed more time to do that. Like, I couldn't do that for 600 people, but I can do that for 100 people. I can do that for 150 people.
Mm-hmm.
With the aging population, they need more hands-on care than high volume businesses are going to be able to provide. And I feel where I'm in this position of working for passion as opposed to a paycheck, I feel like I'm the right person to do that right now.
Mm-hmm. Yeah, I mean, when you think of financial advisors, I mean, maybe I'm making a stereotypical description here, but oftentimes they're very much like profit driven. They want individuals with a much larger investment capacity and probably a lot of liquid assets that they can go and invest,
Mm-hmm.
right? And the ones that they can grow with. Maybe they're build like a business person that's asset is growing over time, not somebody who's in their, like you described, right? Like someone who's their creating capacity is gone. They're not in their top performance. Like those are not the prospect that they're chasing. So you definitely are coming at it from a heart of serving and helping, as opposed to profiting from whoever has the least financial knowledge, right? From what I'm at least hearing you say, which is kind of the total opposite of what big corporations are trying to do.
Yeah.
They're wanting to grow their portfolio size and find the people that has the money to invest and the least amount of demand on the financial planners.
Well, I think it's just, I wouldn't say that across the board. I mean, financial planners, even if they're part of large corporations, it's like going to a hairdresser, right? Your hairdresser might work at an organization where there's 20 other people that work in their shop, but their skill set and what they care about and what they do as an outcome, it appeals to you, right? And I would say even when you're looking at the larger corporate registered investment advisors or the broker dealers, it's not going to be about the company necessarily. It's about the person who's taking care of you, and do you communicate well with them? How much do they care about you? Are they providing what you need as far as service experience and consultation, like knowledge, right?
Mm-hmm.
So I wouldn't go to say, most advisors are this way or that way. Everyone has their own style, and a lot of advisors are really great. For me, I've just found that I work really well with, it's not just these older ladies, it's just the life cycle. I've been in the industry for 20 years now. My clients are aging. Like that, it's not that these are the prospects I'm going after. These are the people that I've committed to taking care of at some point in their life. And I'm continuing to take care of them because that's the role I serve. They've chosen me as a trusted partner who's going to help them throughout their financial journey and help them tell their money story to their children and help ease the burden when that wealth transfers to the next generation, because I'm creating relationships with their beneficiaries, their children, their families, right? So it's just a different way to go about it. It's not better. It's not worse. It's not really anything. It's just the approach that I have in this role and in this job and in this career. And, if you ask my husband what I'm good at or what I was put on this earth to do, he would tell you it's to take care of people. And so I align myself similar to maybe a nurse or a doctor, where I am literally here to care for somebody, maybe not their health, but definitely for like their wealth, the well-being of their wealth, the well-being of who they are, and for the family, because I've seen a lot of families fall apart after these matriarchs typically pass away, right? And I feel like as financial professionals, we can do a better job of smoothing out that journey. I don't think we've done a great job of it because we've been so transactional in nature in the advice we provide and in the investment management approach and in the estate planning approach. And if we take our time and help these families connect and help mom tell her story and share her financial value system with her kids, oftentimes we can smooth out these issues before they even take place, right?
Yeah, I love the heart that you have, because I think it's it's in some sense very rare in this space, right? Like you said, a lot of times it's not intentional on the financial planners, but they're being driven by organizations that has one motive, which is how do we grow our total asset under management? Go figure out how to do that, and we don't care how you do it, right? So I think that's kind of the driver behind some of that. So they don't have the time or patience to sit there and be as custom tailored as possible to the person that needs a completely unique approach, right? Like they're going to recommend the same sort of a portfolio mix or whatnot based on some sort of a
Right.
target date fund or whatnot, right? And then say, hey, here's your financial plan.
Well, I think it's kind of like, it reminds me of the HMO healthcare settings and just the
Mm-hmm.
capacity of, we're in this generational shift where the baby boomers have moved out of the workforce, and by 2027 they're pretty well out of the workforce, right? Well,
Mm-hmm.
they didn't make a whole lot of us. There's not a lot of Gen Xers. There's not a lot of us. Um, what we're going to have is these capacity issues where you're going to have more people that need services than you have either doctors or nurses or financial advisors to meet that, right? So
Mm-hmm.
your financial advisor at the large firm is going to end up being like the doctor at the HMO, the primary doctor, where they have maybe 1,500 to 6,000 people that they represent. They have to do 15-minute meetings, and when you're there in person, you can do whatever in 15 minutes, but then they've got to go into the
Wow.
next one. And so what I've seen, at some of the healthcare providers out here, we're watching my clients struggle finding general practice doctors to take on their cases under Medicare, because these doctors are also leaving larger healthcare clinics, and
Mm-hmm.
they're going into what they call concierge practice, right? Which is just another
Mm-hmm.
word for private practice, where you can take a little bit more time, you can service clients, income remains pretty stable. You can have and hire your own team and treat them really well so that they stay around, and reward them and pay them well. And so there's definitely a very attractive side of breaking away from these large organizations, not just for financial advisors right now, but I think it's
Mm-hmm.
happening across the board in healthcare as well.
It's actually a good thing. I've seen that model being experimented here in Chicagoland as well, with a lot of my own, like one of my previous like the primary physician left and started his own concierge service, and I ran into him and he's like, oh yeah, I left the original old practice,
Yeah.
and I'm doing this, which I think is kind of driven by some of the things that you've described. So obviously you have a completely unique approach, right? You are coming at it from a very heart of serving
Mm-hmm.
mindset. So what are you doing uniquely to get your message out as in the early days of your practice building? What are you doing to get your name out from a sales and marketing standpoint?
Right now we haven't even really started the sales and marketing. I've been in the
Mm-hmm.
midst of transition, and I have clients who reached out to me during that transition to come be with me because I'm the advisor that they trust and they know that I'll take care of them. And so I've really
Mm-hmm.
just been focused on them right now. I'm probably a month or two out from a solid marketing plan, but I am working with another contractor, 1099 World, right? And he is helping us develop our storyboard. And so we're
Mm-hmm.
kind of developing the money story, and the money story falls in line with kind of the money mapping cycle, which is, if you've got this client that's coming into retirement, and they're like, let's say 55 to 57 is when they start meeting with an advisor. They go through that retirement transition, 60 to 65 years old. They've got their kids getting married, they've got grandkids being born, they've got maybe mom or dad that they're taking care of, and then they begin their phase out into that second half of their senior years. And so you have these milestones that just continue happening, and it's each one requires a a review of the financial plan, right? For the wedding.
Mm-hmm.
Well, we're probably going to have to put some money towards our daughter's wedding. We're going to need to look at where we take the lump sum from and what the tax consequences are of this. Or, I have a granddaughter being born. I want to set up a 529 account and start funding that. How do I do that? What does that look like long term? What does it mean to them? And can you teach me about what the Roth conversion rules are on that were just put into place last year? So there's a lot of milestones that need coaching and advising and consulting, but at the heart of it is really taxes. How do we manage all these
Mm-hmm.
assets that we've acquired in the most tax efficient way possible? And so that's where I spend a lot of my time, is looking at tax scenarios, modeling out potential scenarios, and then making financial decisions based off of that. And so it happens all throughout life. It's just that there's three very different phases of life. There's the accumulation phase, and then there's the distribution phase. And both of those are going to have very different decisions that are going to be tax related and lifestyle related and cash flow related. Um, and so I think being the trusted advisor that I am. I know the marketing and I know the clients will come. The
Hmm.
past few months has really just been focusing on the people that I've already made that commitment to and making sure that they feel well taken care of.
Hmm.
Yeah.
Yeah, and I like the calmness in your voice, and I think prior to the episode as well, you've kind of mentioned your daughter is also very emotionally intelligent, very calm and collected. Especially as a financial advisor, I think it's also very important you have some of those. How did you even build that sort of a skill in you to be able to look at the world, look at the problem, look at the challenge in front of you, and have that sort of an approach?
How did I build that skill? I don't know how much of it is nature versus nurture, right?
Hmm.
I was always a very empathetic and caring child. And I think that that's probably who I still am at my core. I think, you're seeing a very balanced version of myself in this moment, but I'm still very much like a internally emotional human. And I would say some of this balance just came from living life, just came from, going through the market traumas with my clients, going through my own traumas with divorce or with changing careers. And I think it just opens up your heart to, I mean, it can do one of two things, right? You get a choice. It can either close you down as you go through that stuff and it can riddle you with fear, or it can open your heart and you can realize that we're not here to make money. The dollar is not everything. We're here to love each other and take care of each other. And when we let that energy guide us as opposed to the dollar, it's just more rewarding.
Hmm.
Yeah. It's just more
It is, and I think, and that view and perspective on life and business and finance, if only more people actually had it, right? Like I think the world would be a much better place because it's almost always like, oh, I gotta have what you have, and fighting for what whoever
yeah.
does have it, right? And then it's just, and no one else, none of us is actually going to take it with us. But we're all trying to hoard it. Story, like you said, the kind of the different stages of is a financial life cycle, right? The creation stage and the distribution. I think there's that preservation stage in the
Yeah.
middle to make sure you keep as much as you can, right? And we're all trying to do that, and oftentimes we do it at the expense of relationships and investing in other people, or even showing
Yeah.
kindness to others. And we do so, and it's very
Well, I
hard
don't think that that's
to stand and
all
watch.
me that I can credit with that. That my husband's been really working on me to adapt to more of his attitude, where he feels like if he puts his energy out into other people, that it's going to come back to him in a positive way. And so he
Hmm.
really tries to stay connected to his community and to continue. He's a coach, so he
Hmm.
continues to give to his students and to the people in his community. And once he took the emphasis off of the dollars, I think it it started showing me that you can still have a good quality of life. I also did some work around my own personal value system with money. And it's a behavioral concept. I do a lot in
Hmm.
the psychology of money. And so one of the things that I started doing at a fairly young age was I decided I wanted my cake and to eat it too. And
Hmm.
probably just because other people said you couldn't do it, right? But I decided that I was going to take every dollar I got and 50% of it was going to go towards the future and 50% of it was going to be spent now. And so I've been
Hmm.
practicing that for many years. And I think that that's kind of where my balance has come from because I'm at a point where I don't really have to worry about the future. The assets will be there because I've always been really good at doing the automatic savings, the automatic investing, taking risk when I need to. When the market's down, I see it as a sale and I'm like, oh,
Hmm.
that's on the clearance rack. Like, I'm going to go get that as opposed to a threat. And so
Hmm.
I think whenever you train your mind and you start creating maybe a map or like a tree map of how you're going to handle different situations, it's like, oh, I've got a lump sum paycheck. I got an inheritance. 50% of that is immediately going into my investment accounts and 50% can go to my bank account.
Hmm.
Oh, I've got my portfolio in front of me and I can see it's down by 20%. I'm probably going to focus on putting more money in because it's de-risked as
Hmm.
compared to, last year. And so when you really start working on mapping your own brain to accept what's going on in life and being prepared for it but not having to control it, I think that's where we find our our peace. I mean, peace is never, for me, it doesn't last, right? I'm not I don't have like, I don't get to this spot and I'm Buddha and I remain in this peaceful, happy place. It, it ebbs and it flows. And a lot of times I find that I'm in my happy place when I'm interacting with other humans, like this conversation we're having right now. I'm in a happy place. But if I
Mhm.
went a full day without talking to other people and I just looked at my stock accounts or just looked at social media, I find that I'm not in a happy place. And maybe I'm anxious. I'm not working. I'm not doing the things that we're meant to do as humans, right? Which is
Yeah,
connection.
yeah, and I think what you said too is very important because a lot of times if you're making financial advices, you want to have emotional stability too because you don't want to make a rash decision just driven by emotion and so go sell everything you got because the market is down 20%. Oh, maybe you should just sell and get out,
Yeah.
right? Whereas you're looking at it from it's on clearance rack. Maybe I should consider buying more of it,
Yeah,
right?
you can.
Uh,
There's like methods to it. I mean, I'm big into, I like statistics, or and
mhm,
so if you're looking at the stock market and it's normally like 68% of the time up or down by 10%, if it
mhm,
goes to 20% up or 20% down, that's an indicator that it's got to revert to a more normal growth range. And you can use that to
mhm,
your advantage. But I don't love market timing. I really love just like
mhm,
creating the value system and creating the automatic investing that's going to take you into the future. And that's the cool thing about being in finance. So if you look at maybe the realm of financial professionals, you have accountants which look at history, right? They're looking at what happened last year, or the
mhm,
year before that, or the year before that. You have economists, they're focused on the present. Financial advisors and people in finance, we forecast the future. And it's a very soft and
mhm,
fuzzy skill to forecast the future because all you can work off of is averages, right? But the thing about being able
mhm,
to forecast the future is that you can work backwards and you can define what you need to do today. Maybe it's soft and fuzzy, but you can take action towards getting closer to that point in the future. And that's what I love the most about what I do is like I'm I don't try to control the outcome or the future, but I can use a set of assumptions and I can help people solve for what steps they need to take to get closer to that milestone.
Yeah, but you kind of still need the accountant making the numbers, making sure they're reporting the right numbers, and the analyst analyzing that, and then so you can make really good informed decisions about the future how to properly allocate your assets in the future for sure.
Yeah, you've got to have, I mean, you've got to have a whole team of financial professionals if you care about it, right? Like if that's
Hmm.
the thing that you care about, you have to have people that are on your side and working for you.
Hmm. A lot of times, I think you mentioned earlier, hey, maybe in your the 50-year-old, you're meeting with a financial advisor, kind of planning for your next phase of life. What's the earliest you recommend someone even start having a financial planner involved in their financial decisions and planning?
I mean, it depends on their goals. Like with my clients, I start working with their children. I have like people as early as 27 years old,
Hmm.
and I'm helping them start thinking about their their tax situations. I mean, the reality is you're looking at a generation of people that are already making, in
Hmm.
their late 20s, $300,000 together. Like I have engineers that are 32 years old. They already have equity in companies. Like things are getting complex fast for the younger
Hmm.
generation. And they have decisions that they're facing that maybe the baby boomer generation did not. Right.
Hmm.
And so what I do with them is I'll usually work with them on either an hourly or per plan basis or for the services we provide. So if we're doing tax planning or if we're putting together an estate plan for them, I'll do, a service charge. If they have parents that work with me, I definitely work with them, in good faith.
Hmm.
And
Hmm.
I will take on whatever account size in that realm, um, because I think it's the right thing to do for the family. I mean, that's the reality. Like their parents are with me because their parents care about their wealth, and their children are with me because their children have a similar value system, and they've been
Hmm.
brought up to care about creating wealth.
Yeah. I think you're sort of right about younger generation. I mean, even not even having to be an engineer. Like people are not even engineers. These are people who are much younger than that on social media platform, becoming influencers
Mhm.
and getting multiple six figures
Yeah.
in compensations. Right, like they're having to make financial decisions, and there's a lot of false and wrong advice on YouTube on how to properly structure your
Mhm.
financial planning and everything
Yeah.
else. So certainly, the younger generation is should be starting to think about this much earlier than sometimes even 20. in their late
Yeah, I
20s?
think that's when I started, really focus. I mean, obviously I got into the industry at 22, but I really started honing in on my financial plan like right around 27, which benefited me. I mean, I'm at a
Hmm.
point of like I'm 75% of the way to fire right now, right? And it
Hmm.
gave me the ability to say, "Hey, I've got this very healthy W-2 paycheck, but I want a little bit more freedom. I want to be able to be who I am as a professional, and I want to work with people I want to work with." And I could
Hmm.
do that without fear because I had done a really good job from 27 to 41 years old preparing myself for this next chapter of life. Right. And I
Hmm.
think those of us who are in these high pressure careers earlier in life, there's going to be a point where you have to decide like, can't, how long can you work at capacity? How long can you
I don't
work at
know.
peak
It's
performance?
maybe into their late 40s. I think that's probably it. If by come 50, you have a lot of other, health
Yeah,
issues,
there's some
family
burnout.
dynamics
Yeah.
changing. Yeah.
Yeah. And so that's where, if you start preparing yourself young enough and you build your nest egg to where it can at least make up a good portion of your income, you're just going to give yourself freedom. It's just buying freedom. And that's why I really
Hmm.
loved the value system of 50% now, 50% later, because it got me where I needed to be to feel comfortable changing my life and my lifestyle.
Hmm. Yeah, and you don't also want to be a miser either, right? Like all you do is hoard, and but you don't enjoy anything. Because I've seen the other extreme of that, where people just never enjoyed their life, and now they have a lot left to
Yeah.
use, but they don't even know they can't even travel because they're completely tied to their home because they have diabetes and blood pressure and whatever else, and they can't even enjoy
Well, I
life.
mean, it's not fair to say they can't enjoy life because, if they just hoarded all that money and didn't spend it in the first place, it just means they're
Hmm.
not enjoying an expensive life, right? They're enjoying a
Yeah.
lifestyle that's below their means. Um, I know plenty of people who aren't traveling in their retirement years, and they have plenty of money, but they feel
Hmm.
like, they don't need to do that. Um,
Hmm.
my dad likes to hoard money. He likes to look at it all day, every day. That's his thing, and that's what brings him joy. And when the market's down,
Hmm.
it doesn't bring him joy. But I think it's fair to say like we're all just moving around in our peaks and valleys, for one reason or the other. And some people have a tremendous amount of joy for every dollar that's piled up in that account, and they like watching it grow. And for other people, it's more they value time, or they value the
Hmm.
freedom to travel. For some people, they value community. Everybody's just got their things that drive them and that um, make them happy, or maybe make them sad sometimes. But I think
Yeah.
we're all happy and miserable in the same token from time to time, right? Like there's a
Yeah.
balance to it.
Most certainly. When you were talking about the younger generation, I was also thinking with Robinhood and all these no-cost trading platforms became so prevalent. I think younger folks are also able to invest, buy fractional
Mhm.
stocks and buy ETFs,
Yeah.
and do so without having to rely on a big company or even having to pay per trade. So I think that also increased the financial knowledge of
Oh,
younger
sure. Well,
people,
they
and
gamified it.
yeah.
It was, like Robinhood gamified investing. And so anybody who enjoyed video gaming, it was very easy to
Hmm.
get into crypto or into stocks. I think it's awesome. I think it's
Yeah.
awesome.
This.
It's the problems that are going to impact this generation are going to be different than like every other generation, right?
Yeah.
And I think it is pushing them towards needing the assistance of a financial planner, financial coach earlier in life. Really, what's going to
Hmm.
get a lot of them is just the tax optimization. Because when you're inheriting accounts, like the IRS has rules around the IRAs that your parents currently have. We pushed generations of people to put money into 401ks. So there's a lot of taxes that are going to be assumed by the next generation on top of the investing that they've done, on top of their earned income. And so there's going to be a lot of tax planning needed before
Hmm.
decisions are made in their
Yeah.
lives. So that's where I think a lot of opportunity is going to continue to live, is in that group of people that's currently like 20 years old to maybe even my age, 40, 41. I think most people that are going to visit a financial advisor probably have a good idea of who they're going to work with by 57 to 59. But I think
Hmm.
with how quick technology moves, people are already starting to talk about how to retire by 40 years old. And I haven't heard that a lot in
Yeah.
my career. That has been
Yeah.
the early retirement age. And I think it has to do with the burnout and just how fast we move in society now. I think a lot of
Yeah.
people get overwhelmed at a younger age, and we have to plan for that. You have to plan for that burnout, because at some point in your career, you're going to feel it. Like, no matter how good you are at it, after you've done the same thing over and over for a long time, how are you going to navigate that burnout and change your lifestyle in a way that you can release some of that stress? And
Most certainly. And I think, yeah, and I think we're hearing a lot more about the mental health situation in this nation. A lot of it, these are younger kids too. And it's not like they're in their late 50s and having mental health issues. These are young kids having a lot more, right? Because they're trying to perform at a higher level. They have to show up on social media. They have to be in so many places at a higher level, which I think is putting a demand on their overall health, most certainly on their mental health.
I think so too. I think you're exactly right. I feel like it's just the ADD, for a while, I thought it was me that had ADHD. And then I looked at it and I'm like, oh, it must just be these 50 different programs open on my computer right now. It's not me. I can't focus because there's I got notifications here just in the time we're talking. Notifications here, notifications here, notifications here. I probably got some on my phone, but it's on silent. So it's just, it's, there's a lot of things going on all the time now. And it's good to financially plan and prepare for the fact that you're going to get burned out at some point. You're going to want to make change. Be ready for it.
Yeah. Someone actually saw my phone and I had all these apps with so many numbers with the red circle over it. It's all notification numbers. And then they were kind of panicking. How can you live with this? It doesn't even faze me because it's too many. I can't keep up with it. So I just ignore some of them. So that's the thing, where there's just so much coming at us at a given time, expecting us to attend to all of that. So, yeah.
Just prepare for it. Be ready for it. Develop your money story. Create your value system on how you're going to handle lump sums, bonuses, inheritance. When you sell a house, how are you going to handle that? You can prepare yourself to calm down a little bit earlier. You don't have to function at this high of a level all the time, even though it feels like it.
Yeah. It's better to somehow have that little bit of a slowness, right? Otherwise, you may not be able to keep up that pace forever. Yeah. So you definitely need to. Well, knowing what you know today, Lauren, what advice would you give the younger self?
I obviously would have invested it earlier than 27. I think if I could go back in time, I probably wouldn't have put quite as much in my 401k. I would have put more into my Gap account, and maybe planned for a little bit earlier retirement than what I did, in terms of having the ability to access it before 59 and a half, especially if I knew that this transition was coming. I mean, I think 2 or 3 years ago, no one would have convinced me that this is where I'd be today. And so also just what my husband always says to me is I have to release control and just let life happen. And I will continue to give myself that advice, and I will continue to try to practice it.
Well, I'm glad we connected. Thank you for sharing your life lesson and wisdom with my audience. Thank you so much for joining me.
It was great being here. Thank you so much.
This episode of Coffee with Closers is brought to you by One IMS, a leading digital marketing agency helping businesses win new customers. To request a free marketing ROI audit, please visit oneims.com. If you enjoyed this video, please share it. To make sure you never miss an episode, please subscribe.